Hello and welcome everyone to Oil Asset of the Day, presented by myself, Phil Carr, at the Gold and Silver Club. So as we head into a fresh week here, what do you need to know for oil prices? We have in fact now seen 2 consecutive days of pullbacks on oil. As we mentioned last week, we actually tapped those ranges we were looking for. We had that breakout to $55 per barrel. We talked about the fact that we were buying in back at the lower end of the ranges. In fact, on Friday, banking with our trade, our long positions over 150 points with oil. We have started to see a bit of a pullback now for this week, which actually sets up quite nicely within the sort of levels that we're looking at for this week. We are looking for $55 per barrel, which is where the oil prices are at the moment, to provide some degree of support. I'm looking out for buying evidence at these zones. $55 can be quite a key magnetic level. Oil does respond very well to these $5 handles. So previously we found support very close to $50 per barrel. Going back towards the beginning of October, we broke out to $55 per barrel last week, which was our essential target that we discussed with you last week. And now we've seen a breakout above those zones and a retap of now previous level of resistance turn support. Over this week, I am projecting a potential for oil to break out back towards $58 per barrel, which of course would be about a 300-point move from where the prices are at the moment. But we do need a few things to happen in order for that to occur. So essentially, we've seen progress with the US and China trade deal, which overall can provide certainly optimism for oil. We saw initial breakout to the upside, but we're also seeing global economy negative sentiment with respect especially to China data, which is providing a narrative of a lack of demand for oil. So with that, we've seen a bit of a sell on oil over the last couple of days. However, you want to look very carefully this week at the API data, which is coming out later on Tuesday, and of course Wednesday's oil inventories data as well. So last week we saw a drawdown on the oil inventories, and with that we saw quite a significant breakout to the upside to oil, which really helped our long positions considerably with that breakout above $56 per barrel that we saw later on in the week. So you want to watch out to see whether we will get another drawdown here on Wednesday's oil inventories, or whether there's of course oversupply. Generally speaking, a drawdown would propel oil prices higher, and of course if we were to see any oversupply in the market, that can cause more pressure to the downside. We have had this healthy correction now from the gains that we had last week. As I mentioned before, go to higher time frames on oil. You can see very clearly where $51 per barrel has been providing a lot of support. I mentioned last week the risk reward was skewed to the upside. Many market analysts and traders out there, especially technical traders, were getting very bearish on oil. We saw hedge funds and money managers last week, they reduced their net longs to the lowest position all year. This is where we were buying. We were expecting a turnaround for the market there, and this worked out perfectly. So with that, with hedge funds and money managers over this week, they have increased their overall net long positions on US oil. They've decreased their positions on Brent crude oil. I am expecting support to be coming in around this $54-55 per barrel handle. But again, as always, we look for buying evidence at those levels. I need to see that we're catching a bid at those zones. Otherwise, we could start to have a more significant pullback. But ultimately, if we can find support around this $54 to $55 per barrel handle, I'm looking for a rotation between now and the end of the week back towards that $58 level. Bear in mind, again, we have the FOMC statement on Wednesday, which can cause big moves on oil, and of course Friday's non-farm payroll as well. So likely we're going to see that volatility, and we're looking to overall capture a potential breakout again to the upside over the course of this week. So with that, that's been Oil Asset of the Day, and of course I wish you good trading.